In this video, we're going to start talking about financial statements in general. And in the next videos, we'll branch off into what's referred to as financial ratio analysis. So let's go ahead and get started. If you kind of think about statements in general, one of the places that we can go to actually find financial statements is the Stockholders Report or the annual report. Now, this document is created with several rules that are very important. The first, I'm sure you've heard of, what are referred to as generally accepted accounting principles or GAAP. This basically sets the rules for how accounting is journalized. How are the events recorded? Sarbanes-Oxley is a more recent kind of a regulation that basically provides better quality in these statements. It creates better quality because one of the things it does, it requires the CEO and CFO to sign off their signatures on the annual report, but also the audited statement of the annual report, but it carries with it criminal penalties should we find out that something is amiss within it. So it's different than what it was in the past. Two additional parts to this document are very important. The statements are obviously what we're looking for, but there's also what's referred to as the letter to stockholders. This is basically the first kind of document or report that's in the annual report that talks about what's going on from the management's perspective. So this is the letter to stockholders. In addition, there's something called the notes to financial statements. This section of the annual report provides information about how the line items were actually determined. So if we have questions about inventory, for instance, we can go to the notes, we can find the section that talks about inventory, and that will tell us how it's calculated, give us some more detail, but it provides lots of information about the statements themselves and how they were created. So the first of the four key financial statements is the income statement. I'm sure everybody's aware of it. Eventually, we want to get down and talk about dividends per share. We'll actually have a whole set of videos talking about how companies and management determines what dividend policy should be. Now, this particular financial statement came from a website that's called it's Zacks.com, www.zacks.com. And at that site, you can type in a ticker symbol for a company, and a web page comes up. Actually, several web pages come up concerning only with that particular company. There's a financial statement section, and you can download those sites. Now, download is stretching a little bit. Actually, what I did was I highlighted and then copied and pasted into Excel. Then you got to manipulate a little bit to get the columns all right, but it works out pretty well that you can download. And of course, from the income statement, what are the things that we really want to know? Primarily, sales, right? We want to see what's happening to sales. We want to see what's happening to gross profit. Again, we'll define all of these line items later on in greater detail. We want to find out something about earnings before interest and taxes. They word it a little bit differently here. Income after depreciation and amortization. This is essentially EBIT. Then we have some non-operating income. For some companies, it's important, others not. Then we have pre-tax income or earnings before taxes. And of course, at the bottom, net income. Sometimes we'll use the line above, income from continuing operations. but usually there's not that much between those two. You can see here, there's only a couple line items in between, so it's relatively not impacted that much between the two. So those are the primary things. Those are the primary things that we're interested in from the income statement. The balance sheet, obviously, this gives us a summary of the company at a specific period in time. We could talk about all the different components. That's obviously important to understand. These are the definitions of those line items. You can go through that and review that much as you want. Short term basically means it has a life less than a year. Long term means it has a life of greater than a year. Now, what I like to think about when I'm analyzing the company, when I'm thinking about looking for measures of performance or efficiency, you have to think a little bit differently than what maybe an accountant thinks, right? The total assets, the assets of the company, these are the things I purchased to run the company. These are just all the things that I've acquired for us to do our job and do the business. Some of them are short term, some of them are long term. Some of them you can see, like plant and equipment, we can see. Some of it you can't see, intangibles, you can't see them. There are things like trademarks, brands, goodwill, right? But these are all the things that I've purchased to run the company. The other side of the equation is the liability and shareholder equity section. This tells us, where did I get the money to buy the assets? This is the finance piece, and they are separate and distinct. We buy assets and we use them. This just tells us where we got the assets to buy them. Now, some of the debt we have is short-term, current liabilities. Some of the debt we have is long-term. Equity, right? Some of it, we got from shareholders. Sometimes there's preferred stock in here, but this is kind of important. It's called retained earnings. These are the profits of the company that we've retained and we've reinvested in the company. So if we think about where does the company go to get money, it either borrows them, right? The liability section, or it gets it from owners. Those are the only two places. The money it gets from owners, it either issues stock or it uses profits. So again, it's a different way of thinking about the balance sheet that can help us understand performance, right? And how we want to measure the way the company is operating. Now, in some of the things that we've talked about, there's also something called a stockholders report. Now, sometimes this is actually incorporated into the balance sheet itself, so we don't necessarily see a separate report. But essentially, this just reconciles this one particular line, which is that retained earnings section. And I'm just going to show you how it typically works. You have retained earnings in the beginning. You add the profit for the year. Then if there are dividends, you subtract out whatever dividends you paid, and then you subtract those out. That gives you your retained earnings. 1135 is the balance here. So this was the balance on the last year's retained earnings. This is the balance on this year's retained earnings. because the beginning balance is the last balance from last year. So again, this is just a statement. It really doesn't give us much information other than it shows us the dividends that were all ultimately paid out. Now, on an annual report, there is something called the stockholder equity statement that breaks this down into a lot more detail. But we're not going to be too concerned about that right now. Finally, we have a statement that's called the statement of cash flows. Now, the statement of cash flows, in my opinion, is a very important statement because it illustrates three basic decisions that management makes. So this provides a summary, right, of the decisions that were made in operations, in investing in the company, and in financing for the company. And it illustrates that for us on a financial statement. So here we see we have some line items, right? So right here in the middle, here we say this is where investments start. So we want to go up here. Here's net cash from operating activities. So whatever this company is, this is Coca-Cola, by the way. This company, as we go across here, we can see that every year they have positive cash coming in the company from selling their product. If we go down a little bit further, now we'll find here's the net cash that comes from investing activities. So what did they do? They either bought or sold plant and equipment. They either acquired or disposed of subsidiaries. They had some other general investing activities. And we can see that sometimes that's positive and sometimes that's negative. Finally, if we go to the bottom, we're going to find the net cash from financing, right? So down below here, if you look, we see what here, they issued some capital stock. So they either issued it or they repurchased it. If you look here, negative number. So they bought back stock, they bought back stock, they bought back stock. And here they sold stock. And likewise, they either issued or paid debt. They issued or paid off short-term debt. They have payments of dividends and other distributions. They maybe could have put a line item here for interest, but in general, this just shows us the net cash from financing. And again, these are the key critical decisions of a financial manager, right? Let's look at how we operate the company. Let's look at the investments that we make in assets, and then let's look at how we finance those purchases. So again, I mentioned earlier, there's something called the notes to financial statements. Those help us explain what's going on inside the report. Now, there has been some movement in the accounting world to make some changes in the way statements are reported, right? So there is what's called FASB. It's the Financial Accounting Standards Board. They require companies to translate their foreign currency dominated assets into dollars, right? So when you're looking at everything on the statement, everything is in dollars. So that's very helpful, obviously. But they're also, sometimes they think, well, maybe we should update this data to reflect the current rate, because we know these assets are recorded in their historical context, but because of the changes in currency, we know that that historical thing sort of changes over time because of the differences in currency. There's also some movement in general to convert all financial statements all over the world into an international standard. Now, there is some movement to that. It's been a little slow in coming to fruition, but it is out there. So again, that's the first video to talk a little bit about financial statements. See you soon.